So let me introduce Mark anyway, and then I'm gonna hand over to Mark, and then he's gonna run the session. Look, Mark's one of the founders of 1,000 Steps, along with myself, and he heads up Australia and the New Zealand business. Prior to 1,000 Steps, he's been is it really since 2019? Yeah, that's 6 years.
Yes.
Amazing, yeah.
Yeah.
So he held a set of senior roles within Volvo Group, but he was heading up sales worldwide for Volvo lorries. It was Volvo trucks, wasn't it? Yeah, that you
Yeah.
were dealing with
Trucks.
that. Yeah.
Yeah.
So being based in Australia, Sweden, Singapore, Mark and I met in Singapore, and his passion is helping and supporting small and medium-sized businesses to leverage best practices that generally they don't get access to that large organizations like Volvo Group have. Yeah. So anyway, Mark, I'm looking forward to the session today, and I'll hand over to you.
Awesome. Thanks so much, Fraser. And really, it's great to have the opportunity to speak to so many people at one time. And the only regret I have is that I can't see each of you individually, and perhaps can't read your body language or ask you directly at any given point in time what's going through your mind and what's clear and what's not clear. In order to manage through that ambiguity, please use the chat function, and the team will pick up any questions that you might have or any clarifications that you might seek as we move through the material today. So let's kick off. Thanks for joining on time, by the way. We really appreciate that, because it is a tight 1 hour period of time that we have to work within, and the material that we've got to share with you today is pretty tightly, densely packed into that 1 hour, and also allowing for some Q&A. So, thank you for making the time, and it's very much my intention, Fraser's intention, that this material that we share with you today gets you started on a journey that is so important. Getting that strategy right will explain all of what that means, and a little bit of a bit of the detail around how to do it in as much time as we have. And we'll start by asking the question, what do we mean by sales and marketing strategy? Because like with a lot of words in this space, they're often hijacked and turned into cliches, and you might find that the meanings that you get from different people vary. And what I want to do is make this as simple as I can do, really, and at the risk of oversimplifying it, I think it's important. I think sometimes when you simplify something, what you really do is expose the truth behind what's actually inside of the box. And so that's my intention today: demystify all of these things, use simple language, and make it as accessible as possible. We'll do that in the first part of the agenda. Then we'll talk a bit about segmentation, and I'll share with you some best practices. We'll then move on to the value proposition and explain what that means, and some of the best practices around value proposition development and why that is so important. Then in the fourth part of the agenda, we'll then share with you some tools which basically ask the question, what next? Having built a strategy, what do you do with it? How do you actually turn it from PowerPoint into meaningful activities that can drive the ROI of the investment that you put into this space? And I don't just mean cash investment, but also, and probably even more importantly, the allocation of resources, the people that you have working inside of these processes, in your business, how you get the most out of them. Then, as I said before, there is a bit of time for Q&A, and there's also a little bit of time towards the end where we'll actually start to look at the key questions around some of the key questions that you might have. So for that purpose, we'll have a little survey, and I'll share with you the results of that survey in a follow-up message to you all later this week. So we'll start off at its simplest. Sales and marketing strategy and the execution thereof starts with two questions. And the first is, who are we targeting? And the second is, what benefit do we offer? Those two questions are absolutely fundamental. And the first question, who are we targeting, is answered by segmentation. Segmentation is the exercise whereby you can begin to look at different groups of people who perhaps are currently buying and or who could potentially buy in the future. And we categorize those into different discrete segments to allow you to make decisions about which of those you want to prioritize with your messaging. The second question, what benefit do we offer, is answered by the value proposition. And we're going to talk into that because there's a bit of nuance around that. And I want to dispel some of the myths around what the value proposition is, or in some cases, not necessarily what the myth is, but more importantly, why the value proposition that you may be using today isn't getting the necessary traction with the very people who make the decisions in the organizations that you're targeting. So we'll go into that in a lot of detail. When we have these questions answered through those two processes, that allows you to start at the front end with what we call demand generation. And that is the role of the 4 Ps that you might be familiar with. So getting these things right informs your price points, the promotional strategies and the execution that you take, the product and the product development that you offer and that you develop into the future, and the place or the distribution strategies that you want to deploy. These 4 Ps are all about engineering the future through marketing, and it's about demand generation. How you then execute sales conversion, creating opportunities and converting those into sales, that's the final stage. And that's dictated by your lead generation activities, the sales process that you take your leads through, and finally your key account practices that you deploy to make sure that the customers that you have got are happy and satisfied, and that you're maximizing your penetration of those accounts. So this is how the framework looks. And looking at it in a different way, this cyclical process is really useful as well. So the process starts by looking at segmentation and value proposition and using that to form the four Ps. That gives you a direct input to drive your lead generation strategy. So you need a steady and reliable flow of leads to create opportunities for you, which you can then convert through the sales process. You need a sales process. So the lead generation strategy that you deploy needs to be based around the segments that you've decided to prioritize in your segmentation strategy. Your sales process needs to take your value proposition and deconstruct that and use that value proposition to identify what are the necessary questions that we need to ask at each stage of the sales process in order to understand the conscious and the unconscious wants and needs that relate to the values that your solution's able to drive. So you can see how this is beginning to come together now. Account management, again, it is an opportunity for you to take your clients in order of importance and make sure that your key account management activities are consistently geared towards satisfying the wants and needs of those key accounts, and making sure that you're maximizing sales and profitability with those people within those organizations. And then finally, you want to make sure that your sales performance management is managed through your CRM. So your CRM needs to be aligned with all of these things, and it would therefore give you the opportunity to use that tool to secure the maximum level of efficiency and productivity out of the sales force, to make sure that they are chasing the right leads and getting outcomes with those leads. You can get that through performance management toolkits within the CRM, but also to make sure that the process allows you to manage and control over the course of a period of time. Is the strategy actually achieving the outcomes that you want? And if not, maybe you need to go back to the top of the wheel and adjust your strategy and then go back into the forward period. So that's how it all falls together. So let's look then in a bit more detail at segmentation. So segmentation then, so starts with setting your sales revenue targets. So this is the starting place that I always have with my clients. Let's have a look at where your revenues come from in the past. Let's have a look at where you want your revenue to come through in the current financial year. Then let's have a look at as far forward as you can. And depending on the forecasts that you have in your business, maybe you commit a 3-year forward plan to your board, or your executive team, or to yourself. Capture that as well. Where do you want your revenue to be in the forward forecasting periods? That's the starting point. When you have that, what you can then do, and by the way, I'll just complete this thought. The verticals here are the historic, current, and the forward forecast periods. You can add a level of detail underneath it, depending on what solutions you offer. If you're in professional services, it could be the consulting solutions that you offer. If you're producing something, a tangible product, maybe it's the different goods that you produce, but you want to break that level of detail down. What that then allows you to do is move into this more sophisticated portrayal of what the future might look at. So what I typically do is get my clients to produce this table initially based on an average of historical data. And you might do it for the current year or maybe the previous year. But what you're looking to do is use this analysis to look at where your business is coming from today. So you plot your product horizontals and your industry verticals to give you a sense of where your business is coming from today. And then what you do is you do the same analysis looking into the future. So you ask yourself, where do I want my business to come from in the future? And you can populate this to whatever degree of accuracy and whatever degree of data you might have available to you. Sometimes it's not possible to be absolutely certain, but what is really important is that you bring the key thought leaders in your business together in order to come up with a plan that everybody thinks makes sense. So effectively here, what you're doing is you're creating a matrix between your product horizontals and your industry verticals. And that creates a cell structure. And within each of these cells, you can start to look at where you believe or where you want the majority of your revenue to come from. And as a general rule, what you don't want to do is create too many green cells. What you want to do is create green cells that represent more or less a third of the total number of cells. The principle being here is that if you want to grow your business by 10, 20, 50% or more over a period of time, well, I mean, you could just grow everything by 10 or 50%. But as you will know, if you've done this kind of work in the past, that's not a good approach. You're better off saying, you know what, some of these cells are flat out maintaining. However, some of these cells offer a disproportionate opportunity. And you want to be able to use this analysis to pick up those cells that could bring you a disproportionate contribution to your growth and therefore prioritize them accordingly. And this is one of the ways in which you can do that. So you want to be able to arrive at an outcome where you prioritize the top 30%, maybe the second 30% of the cells are secondary priority, and then maybe there's a final 30% of sales that are not of zero priority, but they're just not intended for you to be something that you allocate resources to specifically. For example, let's just say you had a limited amount of money to attend events. You want to direct that event expenditure toward a segment that's important to you rather than one that's less important to you. Or if you are going to advertise, or if you're going to knock on doors or do other things, you want to make that effort really in those areas that you identify as being of primary, or in this case, green importance. Some of the ways in which you can give some color to your recommendations might be to look at, in each of these cells, the competitive intensity. The more competitors you have, the more intense the competition is, the less desirable it is. The GP, the gross profit margin that you make today, again, you want that to be a driver. Where you're making the most profit, it's worth your time to spend the most time and the most effort to penetrate. Where you're making less gross profit, it's probably not quite so attractive. Similarly, some segments you might look back and think, you know what, that segment's only going to grow in the future, and you want to be part of that growth. Others might be static or even declining, in which case you may want to manage your transition out of sectors that are declining. But these are the kind of guidelines that you can use to give your own strategy a little bit more color. When you've decided upon your green cells, or at least your green verticals, what you can start to do is to consolidate some of the key themes that apply to that particular industry vertical, or even that particular cell, if you want to go into that level of precision. And this is an example of the kind of information that you might want to collect. So you might want to collect some geographic considerations, some targeting persona. In other words, what are the typical persona or role types that the main people that you want to influence will have in that sector? So in some sectors, it could be the operations manager. In other sectors, it could be an asset manager, or it could be a GM, or it could be a VP. It's worth putting in that effort to get that to clarify. There's other information that you can do to give further refinement around the types of companies that you deliberately want to target in that vertical. Maybe there's a size point at which you do or do not want to engage. Maybe there's something around the company values that you want to align with that could be readily found from their website. Looking at their wants and needs is a good way of understanding what it will be that will likely motivate their purchase criteria. And we'll come back to that a little bit when we talk about the value proposition. Target brands and competitive differentiators is an opportunity for you to look at your competitors and ask yourself, what are they doing in those important areas, and how do they compare with us? So that gives you a sense of where you're strong, where they're strong, and how you differentiate. And then you might use the table at the bottom and the pie chart just to get a sense of the brands you're likely to be competing against and how big they are relative to you. So collecting this information and putting it together in this kind of way is helpful from the point of view of bringing together all the knowledge that exists in your organization and then sharing that with others in your organization or partners or agencies who you want to act on your behalf. One of the last steps that you can do is then to look at the very people that you're seeking to influence in the industry verticals and the target industry segments that you've chosen. So you can see in this particular table here that we've got the different industry segments row by row. And then you can see along the top, we've got 4 columns identifying the economic buyer, the user buyer, the technical buyer, and the coach buyer. These are the roles and functions that exist in all organizations. If it's a large organization, you might have entire departments dedicated to this function. In much smaller organizations, or even very small organizations, 1 or 2 people may be wearing multiple hats. But everybody will, in most buying organizations, there will be people, possibly multiple people, performing these roles. So I'll just briefly touch on what these roles are. I'll start with the user buyer, because that's the one that you're probably all most familiar with. This is the person who will functionally use what it is you're producing. And maybe these are the people that you have most conversations with, and when you sell, they're maybe the people that you have the most dialogue with. These are the people who, because they're using your solution, they're most interested in the functional features and benefits that you can offer. And most marketing collateral features and benefits. I'll talk later about why that's not adequate. But it's these people, though, who are most interested in those features and benefits, because they're the people who use them in their own line of work or as part of their own value chain. The technical buyer is the part of the organization that evaluates the feasibility of what you're offering. They might look at contractual terms and conditions, and they're interested in trials and demos and other compliance issues. And they're often represented by the purchasing organization, by the procurement arm of the business, sometimes by the IT department or other corners of the business that look at those things. The coach or sponsor buyer, really key part of the organization that you should be targeting. These are the people who, they may not necessarily have an influence in the final decision, but they are people who have a gut feel for what you're offering and quickly understand the value of what you can offer their organization. And they want to help you to navigate through their company. So they might introduce you to people, they might speak kindly on your behalf, and they might otherwise provide you with information that isn't commonly available. Super important people. You might all be familiar with somebody who's operated the coach or sponsor buyer, as it's sometimes called, in your client organizations. They're the people who advocate for you, who are really tremendously valuable for pointing you in the right direction. Then I want to turn finally to the economic buyer. This is the person in the organization that might often have the most influence over the final purchase decision. They will have the P&L responsibility and the P&L authority. These are the people who ultimately have the most financial accountability for the ultimate solution. And they therefore want to be able to evaluate the ROI of investing with you. They are a tremendously important part of the organization. And as I'll go on to explain, it's the part of the organization that you need to be targeting deliberately and ideally having a conversation with them. Even in the event that you can't have a direct conversation with them, you need to make sure that your solution directly and specifically is satisfying the very things that they are looking for when they're assessing whether to go with one solution or another solution, whether that's in-house or with a competitor. Super important part of the organization. And when we talk about the value proposition, we'll explain the key to influencing these people. So just concluding on this slide then, when you're doing your lead generation, you really want to make sure that you are engaging with all 4 of these buyer types. Any way into a new organization is good. And certainly your sales process needs to accommodate these groups, and your key account management strategies need also to accommodate these groups. So they're super important for you to be mindful of and to have a really clear sense of who they are, what their titles typically are, what their persona are. And with the clients that you do have or those you're engaging with, you actually want to know the names of the people occupying these roles. And I'd say even in fact that your CRM system would tag the people that you know in the organizations with one or more of these monikers. So let's move on a little bit in the interest of time and start talking about the value proposition. And I'll start by saying or talking about what it is not. So first of all, your value proposition is not a summary of your features and benefits. Features and benefits are aimed at the user buyer. Your value proposition is not that, although it will be driven by those things and therefore will be related. The value proposition is not your elevator pitch. The elevator pitch is typically a paragraph which can be aligned, and in fact, I would argue should be aligned with your economic value proposition, but often isn't. It's also not the brand promise. The brand promise, some of you will have a brand promise and you may have engaged an agency to support you through that process. It should absolutely be aligned with the economic value proposition that you offer. And finally, be very careful about delegating responsibility to create a value proposition to a part of the organization that is not deeply aware of how your solutions drive the economic outcomes of your customers. So don't leave this as the responsibility of marketing, although I would definitely suggest that they are part of a cross-functional group who will help you to secure the right answers to that question. Instead, your value proposition must represent the economic impact that your solutions have on your customer's business. In other words, it needs to be a logical framework that describes the impact that your solutions bring upon your customers' revenues, costs, and risks in a language that the economic buyer understands. Now, if you can do that, your economic buyers will instantly distinguish what you're offering from that of your competitors, because it will be in a language that they can understand and translate. It's kind of like, you know, if you work into a room full of Russians speaking French, no one's going to understand you. Or you walk into, perhaps a better analogy, walk into a room full of Chinese speaking French, they won't understand you. But if you speak Chinese, they'll get it, they'll understand. Speaking features and benefits, talking about how your solution works technically, will just not, it'll be lost in translation with the economic buyers. Turn your language around and the economic buyer will understand and they'll really value what you're saying. And that won't leave behind the user buyer, incidentally. You can still make sure you satisfy the user buyer, but you're translating it into a language that the economic buyer can understand. So I want to use with you a very simple graph. It's been used to change the mindset of people all over the world. So hopefully it'll do the same with you. So very simply, on the y-axis, you've got the price paid for a solution, and on the x-axis, you've got the value that's received in return. That's a 45-degree line going up through the center. It's the line of fair value. So basically, if your customers are saying to you that they think that you're on that line, what they're telling you is that they're getting value for money for what they're paying. And generally speaking, when you've got value for money, or when people feel they've got value for money, you're in equilibrium and there's no reason for people to leave you. The problem, and anywhere on that line is fine. An economy brand will operate in the bottom corner. A premium brand will operate more towards the top right-hand corner. And your strategy really is dictated by which part of the market you want to target. Do you want to target the economic end, or do you want to target the premium end, or do you want to be somewhere in the middle? And that's dictated by some of the analysis that you do in segmentation. The issue, though, this becomes more of an issue when your customers are telling you that you're plotted above the line or below it. If you're above the line, what they're telling you is they're not getting value for money, and you'll be losing market share, losing customers if that's the case. And your choice is that you have to get back onto the line, either by reducing your price or by building in more value. Similarly, if your customers tell you that you're operating below the line, again, I wouldn't be happy with that, because you're giving money, you're giving value away. So your choice there is either to strip cost and features out to get back onto the line, or to increase the price point to get back onto the line, and thereby increase your margins. And so therefore, you know, the question becomes, if you're brand A, or I should say, if you're brand B and you're competing against brand A, when you're in that competitive situation, explaining that you're more expensive is easy. explaining why is far more complicated. And you need to be able to explain and justify why you should cost more than brand B based on the fact that you're delivering more value. But it's that question again of value that trips so many people up. It's not about a longer conversation about features and benefits. It's not about that at all. What it is being able to demonstrate that you offer a combination of a superior revenue outcome and or superior cost outcome and or a superior risk reduction outcome for your customers. And if you can do that, then you can convince them that in fact that's why they should pay more for what you're offering. So that's the key part of the value proposition. And then the question becomes, well, how do we arrive at that question? How do we arrive at that value proposition? And really, this is the tricky part. But there is no shortcut to this exercise. And of course, it does involve understanding the features and benefits that you're offering. But what you need to be able to do is to be able to translate those features and benefits into economic outcomes. So these things that we're talking about, how are they driving revenues? How are they reducing costs? Which risks are they reducing? And how are they doing that? And so you need to be able to deconstruct whatever it is you're offering, whether it's a tangible product or an intangible service. And by the way, we do this for customers in professional services and consulting areas. And we do it for customers that produce capital goods, some of which cost millions of dollars, others of which might cost thousands of dollars. The process, though, is exactly the same. It's exactly the same. It's understanding your customers, understanding how they use what it is you're producing, and then understanding then how your solutions are delivering the value that they're seeking. So you need to be able to create a clear logic translation between what you're offering, how those features work, and how those features are impacting the revenues that your customers generate, which costs they're looking to reduce, or and how you're doing that through your solutions. And then finally, which risks are they looking to minimize, and how is your solution doing that? And if you can get that structure right, then you can begin to break this down into a really supremely important model. And then, of course, the next phase is being able to understand, when you look at your deconstructed model, what is the weighting of importance that each of these different value areas represents? Are they all equally valuable? In this case, we've got 4 random areas. They may be applicable to you, they may not be. In this case, we've got 4. But are they all 25%? It's possible, but unlikely. But it's more likely that some will be more valuable than others. So you want to make sure as an activity, first of all, that you have developed that weighting. And then you want to be able to make sure that you cross-check and validate that all of your key features can be aligned under one or more of these headings. Sometimes an important feature can drive multiple values, and you want to be able to make sure that you deconstruct that, but also create coherent language so you don't appear to be confusing or trying to double dip with the client. So make sure everything that you're offering is represented. Make sure that your sales argumentation is able to clearly and logically impact the feature into this economic logic model. And then you use this model in some of the work we were referring to earlier to compare how your solution delivers value compared to your competitors, because that's critical for you in terms of being able to justify why your customers should pay more for you than they should for your competitors. So you need to be able to represent this model when you're looking at your competitive scenario as well. Really important model. With this model, you're then able to start to develop your sales process. So we'll go into that a little bit more now in detail. So how do we leverage the strategy that we built? Well, at the front end, your sales and marketing strategy needs to be right at the driving end of your 4 Ps, your marketing mix. Your price point is, as I mentioned before, fundamentally dictated by how much people are prepared to pay for you and where they see the value. So don't aim your pricing at a segment that has the least value in what you offer, because that means your price point will have to be lower. You can offer a higher price point to segments that see more value in what you offer. and therefore you make more money, but you also satisfy them. Your promotional strategy needs to be aligned with where and how you're driving value. So make sure that your communication strategy is very much aligned with what we know customers want from what you're offering. Your product development, super important. Like going back to the previous model, if customers think that productivity is the most important thing they want from you, then make sure you are offering the very best productivity solution that you can, and that it is superior to your competitors. So when you have a limited amount of time to enhance what you're offering, use that time and discretionary resource to be focused into those areas where customers value the highest. Lead generation. Build a database of leads using the persona that you've identified for those economic buyers, sponsor buyers, coach buyers, user buyers, and technical buyers. That will, in a structured way, help you to broaden out the people that you need to speak to. And then in your lead generation process, when you're nurturing those leads, make sure that the content you're sharing is built around the values that you know you're able to drive. Super critically, final part, the next part, your sales process. Your sales process must leverage your value proposition. You need to work out what are the critical questions we need to ask at different phases of the sales process that can enable us to identify the conscious and the unconscious wants and needs in each of these value areas. If you can do that in a structured way, you will have a sales process that is unique and offers you the greatest value in your organization. It will be a sales process that can qualify in and out the right people and ask them the right questions and extract the highest value and the highest conversion rate out of that process. Super, super important. Account management. When your account management is being executed, it's super important to make sure that the customers that you've got are conscious of the value that they're getting from you, and that if they become, for whatever reason, unhappy, that you concentrate your efforts on making sure that you satisfy them in the things that are most important. And when you enhance what you do, that you use your value proposition as a guide for that effort. And then finally, use your CRM to capture and monitor the performance of your team and to the performance of the strategy, to make sure that the strategy is the right one. And if necessary, adapt it as you move forward in time. So there's a lot, obviously, we've spoken about in a short space of time, and I hope I haven't left your head spinning. There is an opportunity to put any questions that you might have into the chat box right now. But what I do want to do briefly is capture from you a few questions around the topics that we've been talking through today. So if you can all pull out your mobile phones, what I'm going to do is share with you a little online tool that we use a lot in our business to capture feedback at scale. So I'll just pull up with you the QR code again. If you run your phone camera over this QR code, it will bring up this little questionnaire on your phones, and then hopefully you can very quickly respond to it. What I'll do is I'll share with you all of the information that we get from this exercise with you now. But in this first question, we're asking you the question, how important to you is a strong segmentation plan? Is it important or is it not? And then ask the second question, how strong is your segmentation plan today? So there's a 10-point scale. If you think it's important to you, rate it somewhere in the upper end of that scale. Have a think about your value proposition today. Then have a think about your segmentation today. Is it what you want it to be? Is it as strong as you could be? We'll use the information that you're giving us here, and we'll present that back to you so that you can see how your answers compare with all of the other people in the room today. So thank you for going through that. By the way, this will not be identifiable, so you don't have to worry about your name being associated with this survey. It'll be treated confidentially. So please don't be worried or concerned that others will see how you think and feel. The important thing is that the more feedback we get, the better the picture is that we get of how the general population feels about this topic area. So please, if you've got a phone, really grateful if you can perform this little survey. The next slide asks the same questions again about your value proposition. So I want you to ask the question, How important do you feel a strong value proposition is for your sales performance? If you think you can do without it, well, it doesn't matter, does it? I guess. Sorry, but on the other hand, if you think it's super important and you can't be successful without it, then of course it's important to you. Then I want to ask. Then I want you to ask the question: how strong is your economic value today? Does it identify the economic value drivers, and does it do that in a good way? If you're really confident that it's absolutely bulletproof, and give yourself a high score. If you think maybe, having listened today, that you think there's some things that you maybe need to reconsider, then maybe you score it a bit lower. But again, really grateful if you can give this your time. There's no immediate rush, but obviously I think the more we can do here and now, the better. So I want to thank everybody for attending. I know you've all got more things to move on to. Great to meet you all. Thank you for joining us today, and we'll be in touch with a few summaries from today, and I look forward to catching up with you again in future. Thanks again. Bye-bye.